In this video, traders, we're going to look at the importance or how useful is the daily midpoint when trading. Stay tuned. Hey guys, warm welcome to you. All right, so midpoint really easy to calculate. High minus low, it's the middle of those two, basically. Very, very simple. And the midpoint can give us some kind of levels to work off, some biases, some themes. So I've got some ideas here for you, which I'm going to share in a moment, which you might take one or two and go, you know what, that makes a little bit of sense. I'm going to add it to my trading plan, maybe tweak and adjust some things or not. You might look at it and go, yeah, you know what, the mids doesn't really make much sense for me, move on. That's what it's all about, guys. It's all about maybe inspiring and planting some seeds of ideas you can go away and maybe make into a strategy setup or whatever it may be. Okay, so we know that mid is basically a range divided by 2 right in the middle there. So how can we use the mid? So if we can imagine that this is our intraday chart and it's chugging along, and there's a few lines here, but let me explain kind of what's going on. So really the mid's obviously going to be dynamic. As we push to new highs or new lows, the range is going to expand and the mid is going to move with that. So you're constantly adjusting the mid. Now I'm not suggesting that you constantly drag it up as you're moving to new highs, but really when you make a new high and you kind of roll back and counter trend move, then you put your mid in and readjust your mid. So there's a couple of things that you can use your mid for. First of all, let's just kind of look at how we do it. So imagine if we were here in the day, there's our low, there's our high, our mid's going to be this kind of purple line here, then we go to a new high, our mid's going to move up, and it's going to start moving up as we go, and then finally here, there's our high, there's our low, our mid kind of goes up with the price. So some things we can do with the midpoint, and that is pullbacks to mid acts as a decent support level. Very often you'll find, guys, that price might rally up, and as it kind of counter trend cycles, you don't want it, if it's an aggressive move, you don't really want it to kind of jerk back quickly to the mid. You kind of want a nice steady trend that maybe counter trend moves. Something like this is about right, you know, a nice steady trend, bit of choppiness, perhaps a bit of consolidation, standard market conditions, right? Pushes up, pulls back down, and maybe kind of finds some support in the mid, especially if you've got a bit of confluence with maybe a prior high or something like that, then you can add some weight to that trade and go, okay, maybe I'm going to take a trade back in the direction of the trend for a test of highs, etc. So sometimes it acts as some nice support intraday. Number 2, guys, is you can stay biased based on price position relative to the mid. So in other words, you can say, okay, well, while price is above the midpoint, this is obviously very loose and you're going to have some more kind of games to play with this, but while price is above the mid, you really want to be staying long on while price is below the mid, staying short. Now, obviously I'm generalizing, that's not always the case. Sometimes you're looking for a bottom and that's obviously going to well below the mid, you're going to find some support, etc. But it could maybe put you in a theme of saying, okay, well, I'm on the trend, I'm in the trend, I want to stay long biased because the conditions are right above the mid, and just use it as like a final check, if that makes sense. So not always the case. Obviously, sometimes you want to be looking for tops and bottoms, I get it, lucrative. But if you're in conditions where perhaps you have a trend conditions like this, for example, you say, listen, I'm going to stay aligned long. I might necessarily want to be long, but I'm always going to look for long triggers, double bottoms up near the top part, flags, that kind of stuff above the mid. If we start doing some work below the mid, I'm going to assume that maybe the market's not as bullish as I thought it was, and maybe start to look for some short setups. Or perhaps you don't do anything at all. Perhaps you align yourself with a daily long, and then intraday, like, well, above mid, I'll stay long, etc. You know, you can just add an extra layer of filter with that. Okay, now the next one, guys, is you can use the distance from mid as a good reference point. So I mean by this, so you can see how far we're getting away from the mid to gauge whether the day is a trend day or a rotational type day. Yes, we can eyeball that, but if we're going back to prior days and we're saying, okay, price never really get more than 100 ticks away from the midpoint, 200 ticks away, 50 ticks away, whatever it is, and then all of a sudden, you know, we're stretching massively away from the midpoint. Of course, the mid is going to move as you go, but it's going to depend obviously on how far you've gone to the downside, etc. So you can kind of work it out as a reference and go, right, well, okay, you know, price is going to obviously move up with my mid, but if I'm really accelerating, then, you know, we can really kind of stretch between the high and the midpoint, and it kind of gives you potentially a point where you might be a little bit overstretched and might want to counter trend. Similarly, if you're in a rotational market, like, listen, we're just kind of sitting around, a few ticks up and down, blah, 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 etc., then maybe, you know, you don't want to take anything. Final one is, if you're using a VWAP, volume weighted average price intraday, one of my preferred indicators, and against the mid, it can give you some insight into strength. because the mid obviously is just purely based on the high tick and low tick in the middle of the two. But a VWAP is based on the volume done at each print. So if you start to get lots more volume and consolidation time spent near a high, for example, the VWAP is going to slope up. The mid's not going to move because there's no fresh high. The mid only move when there's a new high print or new low print. So if you kind of get a good move and then a strong hold near the high, the VWAP will be much higher than the mid. And so if you have that scenario, let's draw this on, we may as well ruin this now. Let's say you have where the VWAP is kind of doing this, because maybe you're getting consolidations up near high, then the VWAP might really, it's never going to come all the way up, obviously, unless this is in the very first kind of 15 minutes or something. But the distance between that and the mid can give you an idea on the strength of the market and can perhaps lend itself to a late day breakout play. You might say, okay, well, listen, we've got a lot more volume coming in that's holding up here. If we kind of get a little fade to the downside, I might take a long looking for a fresh high. And of course, then the mid's going to move up with that. So you can play around with that, have a little, look at yourself and see VWAP versus mid and see if there's any things there that help work out with your trading. Anyway, guys, Midpoint, pretty simple, but can be pretty useful. Take care, get your risk managed. I'll see you in the next one. Bye-bye.